It's Wednesday, the 10th of February 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. Today's headlines. An inquiry recommends Crown Resorts not receive a casino licence in New South Wales, describing major shareholder James Packer as intolerable. Plus, Macquarie Group shows that financial markets are strong again. Suncorp and James Hardie's earnings delight, but Challenger and Boral disappoint. And a mixed time for retailers in Australia. Crown Resorts is not suitable to hold a licence to run its flagship Barangaroo Casino in Sydney, at least in its current state, throwing into jeopardy the James Packer-backed operation. A New South Wales casino inquiry has recommended the licence only be granted under certain conditions, including Mr Packer selling down his 37% stake to 10%, an overhaul of the board, and the undertaking of an audit of its money laundering controls. Commissioner Patricia Bergen SC was scathing, calling the company arrogant, criticising it for facilitating money laundering, exposing staff to the risk of detention in a foreign jurisdiction, and pursuing commercial relationships with individuals with connections to triads and organised crime groups. Commissioner Bergen called different sectors' testimony unedifying, lacking in candour, lacklustre, and inexplicable, and suggested several directors quit. Chief Executive Ken Barton will probably resign this week after she said he didn't have what's needed at the helm of a casino licensee. Mr Packer was intolerable, she said, though others were criticised more harshly, and she conceded he wanted the casino to succeed. Where to now for Crown? Well, the New South Wales government has to make its recommendations, but it can't ignore the report. There's a risk that the impressive monolith in Sydney's Barangaroo precinct becomes a white elephant. Anything could happen, and I mean anything. Privatisation, takeover, sale, collapse. We all await Crown's response. In overseas news, the European Union wants big technology companies to pay for content, mirroring the debate going on in Australia. The European Parliament is working on legislation and watching what's happening here to compel Google and Facebook to pay for news. And the head of a World Health Organization-led team trying to uncover the origins of COVID-19 said bats remain a likely source of the virus, and it could have spread via frozen food. It's very unlikely that the virus leaked from a lab. Locally, Macquarie Group provided a quarterly trading update yesterday, and a revival in mergers and acquisitions, initial public offerings and trading has helped the financial giant get through COVID-19 in reasonable shape. Macquarie expects its full-year results for the 12 months to the end of March to be slightly lower than a year earlier. That's a pretty good effort given the COVID-19 pandemic. Suncorp announced a sharp jump in first-half earnings with stronger contributions from both its insurance and banking arms. The group paid the same dividend as 12 months ago. Annuity provider and fund manager Challenger reported a jump in half-year profits on the back of stronger sales of annuity products across its business and a very strong performance in its funds management operations. The group's share price has run hard in recent weeks, but yesterday was sold off sharply, down almost 15%. James Hardie's had a remarkable and not always pleasant history. Its share price surged yesterday after announcing a 50% increase in December quarter profits and a 20% jump in revenue due to robust demand for fibre cement board for renovation and construction projects. Boral's share price tumbled more than 7% after it said the drop in high-rise apartment construction hurt its bottom line and was likely to persist because of the lack of immigration and the trend for people to move from cities to regional areas. Businesses started the year in a positive frame of mind, with business sentiment rising last month, according to the National Australia Bank Business Survey. But the Business Condition Index fell after hitting high levels the previous month. Overall, the survey points to an ongoing recovery in the economy. Oil giant ExxonMobil is set to close its Altona refinery in Victoria, according to media reports. There are only 4 oil refineries in Australia. BP has already said it will close its refinery in Western Australia, and now ExxonMobil will shut its doors. SCA Property Group owns neighbourhood malls and regional shopping centres. Many of the malls are anchored by a large supermarket. SCA said earnings were up over the half year to December as more people shopped locally and fewer tenants needed rent waivers. Not all retailers are having a good time. H&M in Australia will close more stores as it responds to tough economic conditions. Meanwhile, the group behind Spotlight, Anaconda and Harris Scarfe is set to roll out new stores, including 150 Spotlight outlets over the next 5 years, according to the Financial Review. And Eddie Maguire, TV personality and president of Collingwood Football Club, said he'll step down immediately after a report found systemic racism at the club. I don't know the ins and outs of this one, but racism is never okay, and he handled the release of the report badly. It's a good signal that he's stepping down. That's the Fear and Greed business headlines for today. Make sure you've hit subscribe so you don't miss out. There's also more in today's full Fear and Greed podcast, including an interview with Robert Francis from trading platform eToro about investing in international stocks. I'm Sean Aylmer. Enjoy your day.